Hello everybody, today is June 26th, 2013. Well, gold's almost back to where it was 3 years ago. Silver I saw at 1860. You might think that I'm crazy. You probably don't, since you subscribe to my channel, but last night when I was driving home, I saw that silver had gotten slammed again. And I just had this biggest grin. I couldn't help smiling. I mean, I like to see it going down. It's the weirdest thing. It really is. I never thought that I would feel this way after starting to buy it in the beginning of '09, paying $12, $13 an ounce, and buying most of what I have under 20. And I bought some in the 30s, not really any over 40. But most of what I'm kind of about even on my real money holdings right now. But this is a long-term proposition. I mean, this is, you know, if you're a get-rich-quick guy, you're suffering right now because you planned on being rich, you know, when you were buying $35 an ounce silver, and here you are, you know, you lost half of it. So this is not get-rich-quick. This is long-term. I got this thing on Yahoo I wanted you guys to see. I'm going to put a link, but I wanted to show you a little bit. I mean, this reminds me of Jordan Maxwell, how he talks about the sheeple and just the average people. With the people that are running the world, I like to use the same analogy he does with the animals on the plains in the Serengeti in Africa. I mean, your average Joe, you know, who's got some stocks and got some bonds and this and that. I mean, he's like an animal in the Serengeti, and the central bankers are the lions, and they're in the tall grass and they're hiding. They're they're planning things out, and the animals, they don't even know, you know, what's going on around them. They have no idea. So I sort of see it the same way. I mean, and these people are supporting that. I mean, guys like that come on these shows are just saying, well, you know, the lions, they're not organized anymore, and they don't attack animals in the Serengeti. I mean, you don't need to really worry about them. That's kind of what they're telling the antelope and giraffe and rhinos, whatever else walking around the Serengeti. Because you got people saying, you know, you don't want to catch a falling knife. Now, we've all heard that. And he says that in this little interview here on Yahoo. No, you don't want to catch a falling knife. Well, at some point, you're going to want to catch the falling knife. I mean, is it going to go down to nothing? I mean, he says gold is unsafe at any price. So at no price would you want to start getting any. You know, it's paper's where you want to be. So anyhow, I talked about a couple days ago, I talked about, you know, people are realizing gold's just a yellow metal. Gold is unsafe at any price. This article, this video here that I'm going to link below, at any price, at $100 an ounce, unsafe. Real money for 5,000 years is unsafe. You know, you want to be in paper assets. You want to be in the dollar. The dollar's safe. King dollar. You know, King dollar. There we are. King dollar. Krugman. Larry Kudlow, who worked at the Fed long ago. I think in the 70s. So anyway, you know, you want to be in the King dollar. As Bernanke is printing $32,000 a second. I figured that out today. I had a little free time, so I did a little calculating and came up with $1.96 million a minute. And that might not be enough. And I'm going to show you an article right here. I think that what he said 3 or 4 days ago, which caused a bloodbath and a dash for cash and all this other crap, I think that he said it with the intention of setting up a situation where he's going to need to increase the money printing. Increase the money printing because, here's why. Let me go ahead and show you this now. Who holds more bonds as the bond market is crashing recently than anyone you know? Well, the Federal Reserve has about 1.9 trillion in treasury bonds and 1.1 trillion in mortgage bonds. So as interest rates have gone up like 1%, by the way, I'm happy I locked in that 3.25 30-year fixed. Might just be the lowest. At 3.12 it dropped within a half hour after my mortgage guy locked it. So I think that was the lowest ever, 3.12, and I got a 3.25. Anyhow, that's off topic. So I want to show you this here. The Fed's Bernanke, 151 billion and counting. These are the losses from his portfolio. Now, do you think that they want to continue to have these types of losses in the portfolio at the Federal Reserve? I mean, what can he do to deal with this type of bond loss? Well, he has to push the rates back down. Interest rates going up. It's going to kill the housing recovery, the little bubble 2.0 we got going on. He's got to push the rates back down. How does he do that? Well, he's got to print more money. You know, there's no way around it. They got to print more money. They're probably going to come out and say, you know, because of the way things are and the interest rates starting to head up, I'm predicting right now within a couple weeks, and I could be totally wrong. I have no idea. You know, I'm just speculating. Going to be an announcement of some additional quantitative easing. Money printing is what it actually is, not in reality, but basically that's what it is, and you all know that. So it's just incredible what's going on. It sort of reminds me of, man, I had all these things I wanted to talk about tonight. I'm sorry, I'm a little bit tired.